Hello, everyone. Welcome to Arbitrage Trade. I am Royce Wells, and it is February the 4th, 2024. Today, we'd like to talk about what is going on with the market. Is it topping? Is it not? Well, according to our charts, let's go dive right in and see what we see. Looking at this on the weekly time frame, we see that we have dollar signs. The last time we had dollar signs, we saw that there was a multi-week correction. So the fact that we have dollar signs now basically may beg the question that February and March may be a little bit rough for the overall market so far. Let's go take a look at shorter time frames to see how soon this might be happening. Looking at our intermediate band, basically this is our third from the top. If you ever use the arbitrage trade band system, basically there are 12 frequencies total, and the intermediate band falls right about the middle of the big bands. So we try to basically gauge how fast or how slow it's moving based on this middle band. So looking at this, we are seeing that we're really close to 3 standard deviations out. So probability is running out over here. It's saying for an uptrend to continue from here, we have to go back down and touch at least 476. The question is, will that be in short order or will that be rather quickly? The faster it happens, the more likely we are to bounce. The slower it happens, the more likely that we are going to settle into a longer term correcting trend. So let's see how fast or how slow this guy is moving. This is our Z Pro indicator, and basically this is measuring all 12 of the bands that make up the arbitrage band trading system, as well as letting us know the probability of those combined bands as a single line. So anytime we see ourselves get to the very top, we see corrections. So we don't like to be up near the top because only bad things happen when we get that high. So like I said, for the market correction that happened in 2022, this basically we were sitting way too high, and looks like again we are sitting way too high up here in our probability. So it looks like there's going to be a little bit of correction in the very near future. Let's go take a look at our other side. So this is looking at indicators, a few more indicators, but on a shorter time frame. So looking at this, we added our loop indicator, and I'm going to bring this down to the 4-hour time frame and reset this chart so we can see what's going on and where we are. If you were with us earlier, we saw that roughly Thursday, our loop went underneath. Anytime the loop goes underneath that green line, that usually means that the market is going to slow down to allow it to get back above that green line. Anytime the loop closes, so basically right now we have a bullish trend that's in progress because we see the green line is on top. Anytime a sell trend is in progress, we see the red line is on top. And the point at which they cross is where things get a little bit hairy. So from where we are currently, looks like the buy trend has been trying to push up at a weekly rate of about $1.79 per day. And it looks like the downtrend has been losing about 85 cents per day. So it's a tug of war. So an average of about a 30 or $1.32 gain per day is currently what we are seeing. So if this slowdown continues to happen, and basically these guys reach an equilibrium where that $1.32 cannot be reached, you will see the red line and the green line cross, and depending on who's tugging harder, that will determine which way the trend will actually go. So looking at this also on the 4-hour time frame, for the uptrend, for the buy trend to succeed and continue on, there is a little bit of a correction that must happen. Basically, for the arbitrage band, we need to go back and see 487.59. And for the intermediate band, we need to see 477.36. Typically, the largest one is the one that's in control. So where we started today, we started on the intermediate band looking at 477. And that 477 looks like our major support for the short term of about 1 month or so. So if it falls quickly, once again, we bounce. If it falls slowly and we gradually get to 477, then there's a good chance that we will continue that trek in that way. Let's go take a look at IWM. IWM is already showing points of weakness here. If you are no stranger to the arbitrage band trading system, anytime we see fuchsia candles, that means we are in the best time to sell window. And what does that mean? That means basically a sell trend should be on its way. And if we turn on our danger zone and deflection zones in the system, typically we only get those fuchsia candles when our blue line is underneath our black line, and that black line is either in the danger zone or the deflection zone. So the fact that this fuchsia candle is showing up with this all the way down here may give us an excellent opportunity to ride the ride down and actually see what it looks like from the top with all of our profits intact. Since this is QQQ, we're looking at a pullback of about 412. So there's about $17 or so in here. So there's only about a 3 or so percent correction that may be occurring. So basically, let's see how fast it gets here or not. And as you can see on this dashboard, our odds are about 75% certainty that we should stay somewhere between 443 and 393. So that means longer term, if we were to fall below that 412, we should find support somewhere near 393 with about a 75% probability of it staying there. So let's continue on. Let's go take a look at the IWM. This is the Russell 2000. Looking at the Russell 2000 on the 4-hour time frame, it's already started a sell trend. Top sideways and bottoms has already gone into a sell. Matter of fact, they triggered the sell roughly on the 31st of January, so Wednesday in the middle of the week. And the rest of the week was pretty much sideways, but mostly down. As you also can see, the loop also went red. Finally, following that candle on Friday the 2nd, and this is where we are right now. This is a 4-hour time frame. So going into Friday morning at about 7 a.m., it tripped. Hey, this is turned into a sell trend, and the rest of the day, all it did mostly was sell off. So it pulled up just a little bit, but then continued its trek down. Looking at this guy on the daily time frame, once again, we see those fuchsia candles. Those fuchsia candles are very indicative of what's about to happen next. We've already gotten our sell signal on our daily time frame, and that line is there. So we're just watching it fall. Loop is red, top sideways and bottoms is red. So basically, buckle up. It may be a very bumpy ride this upcoming week. And that means volatility might be trying to make a move. So looking at the VIX on this time frame, on the daily time frame, it is currently sideways, but this loop is green. It's not moving very much for volatility, but it is still moving more up than down. Currently, Z Pro for the arbitrage band said, hey, new uptrend or new buy trend has just started for volatility. So once again, this week, we're expecting a lot of volatility going into the upcoming weeks. I'm going to turn on our 3D. Basically, this just shows the path probability of our trends. So this is superimposing all of the bands on top of each other to basically say, okay, where shall we go? The cool thing is by defining the bands as such, we see that the candles always stay within the path of least resistance. So that means the smallest trend is always guiding the trend. And basically all we're trying to do is not touch the sides of any of the overlapping bands. Anytime we do, we have a nice correction. So like on this one, VIX earlier, so let's pull back to there. When in May of 2020, right around COVID-19, volatility went all the way to the edge of probability, and this forced us to pull back hard. If you were playing the VIX, the buy signal that came on January 27th of 2020 let us know that it was time to buy at around $12. And if you were watching or paying attention to the trend as it was making its way, you'll see that basically as it got there, it said, oh, yeah, it's time to go. Don't be left holding the bag, right? So as it ran out of probability, we got a nice cross to let us know, hey, it's time to go. So let's take our leave. Ran out of probability, it let us know, and down we went all the way back to that $13 ride and zone. So where we are right now, we're sitting on the south side of the mean of the VIX, which means basically there's more probability of more volatility coming in the near future than not. And if basically volatility was to come to an absolute halt, the lowest we expected to see is about 846. What about a 33% probability? So the odds are not very high for it getting down there, but it's still very possible. Let's go take a look at these few outliers. Let's go take a look at Netflix. Netflix had a nice jump, and I love watching this guy with pat probability turned on because it clearly shows. Looks like the advanced band ran out of room because that's the yellow probability that we're seeing here. We got our nice Z to let us know that, hey, we hit something and it's time to basically come back and correct. So from where we are, Netflix looks like it can have a mean reversion somewhere near around 470, 473. So that's about an $8 or $9 correction or about a 20% correction. But let's see if it can hold that. Near term, so basically near term means over the next few days or maybe next few weeks, it has support somewhere near around 554. With once again probability running out at about 578. So it's in a very narrow channel, and in order to get a lot of movement, we need volatility to pick up. So volatility, please don't let us down. All right, looking at Tesla. Tesla has had a very tumultuous fall, and it has fallen down and looks like it got to the edge of the novice band, which means it went outside of the light blue down here, and basically caused us to bounce, turning back off our path probability indicator. We can also see that we got dollar signs down here letting us know that that was the end of the trend. Expect a little bit of a bounce, and so far it is bouncing just a little bit. Nothing is saying that it's going to basically get over the trend top. The trend top currently has a hard resistance somewhere around 198.54. And how our trend top and trend bottom works is we can't get an uptrend until both of these guys are above that black line, and we can't get a buy trend or sell trend until both of these are underneath. So as you can see, this top and this bottom are far beneath that red momentum line and compass line, as well as the black RSI line. So it doesn't look like Tesla's going to be rebounding anytime soon. But once again, I am not a financial advisor. This is not financial advice. This is just based on statistics and probability that I'm reading from these charts. So any news or anything else can influence this. So please seek the assistance of a financial advisor before entering or leaving any of these equities that I'm talking about. Let's talk about top, sideways, and bottoms. Yes, the top, sideways, and bottoms indicator said that Tesla was going into a sell solidly on December 29th of 2023. So if you were able to get out there when that happened, right as this red X showed, so basically we could detect when the trend is changing. That's what the red X is for. And the green X also lets us know when it's changing and going back in our direction. The first time the system detects it, we will get a red X or a green X letting you know which direction it's going. And you will never have a red X without a green X or a green X without a red X. They alternate and oscillate between each other. So where we are currently now, we're sitting in a sell trend. But wait, as we can see, Tesla is currently bouncing. And if we look at our loop indicator, we see that a green loop is trying. So green, the buy trend is trying to pull up at about $4.11 per day, while the undertow is basically at about $1.76. We'll see if these guys meet again, and basically that tug of war can settle somewhere around 294. If it basically slows down that much, that's the point at which things start to get really hairy, because then the trend can once again change and become a sell trend again. All right. So let's go take a look at real estate. Everyone's like, hey, well, the real estate's going, and the Fed decided not to raise the rate. They were supposed to be cutting rates. Well, that hasn't happened yet. And once again, you notice these fuchsia candles. Seeing these fuchsia candles out here is not a good look for real estate. So basically, from where we said leave, I'm out at about 25 this time. Hopefully you did, and hopefully you're not seeing the brunt of all of this. If you were playing this guy longer term, we actually call the top somewhere around 29 as well in 2022. So basically, this is just continuing on. And if you know how to draw Elliott waves, you can literally see these lower highs keep getting lower and lower and lower. This is actually a higher high, the first higher high, but the last few days have basically said that it's not going to happen, because we see lots of topping motion and fuchsia candles. So I'm going to pull this guy back down, make him small, and we also see that top, sideways, and bottom said real estate was a no-go as about on January 16th of this month, and so far nothing has changed. The only thing that can basically get us back into an overall buy trend on this is for the real estate investment trust to be sideways for about a month, and then suddenly decide to pick itself back up. So I'm not sure if news can hold that long, but let's see. If it does, then great. The housing market continues up. But I hear that Evergrande is having some trouble in China, and maybe about to stir the pot, as they say, and bring real estate crumbling back down to its knees. Let's go take a look at some of these cryptocurrency pairs, because, hey, we have that Bitcoin ETF. What happened when it was sitting at 49,000 and everyone thought that, hey, it's going to be within the next 2 months, it's going to be 70,000, 80,000 again. Not so much. We got Z's, we got dollar signs letting us know right around 49,000 that, yeah, this is not a good look for you. You have to go back down. And then it did go back down, but it's maybe down, but it is not out. We got dollar signs right around 38,900, where it's basically said that, hey, we should be bouncing here. And if you were listening and paying attention and following along, you saw that it did bounce, and we're back up to the $42,000 range. So there was about a 10% gain from the absolute low, but we're still not out of the woods. Top, sideways, and bottom is saying that it's sideways. So basically, for those holders, let's see how long you'll have to hold before you get another uptrend. Looking at our arbitrage loop indicator, we're looking at our loop, and currently looks like red is on top. Looks like it's losing faster than it's gaining, and basically the equilibrium is somewhere around $400 per day. And so far, it's lost more than $541 in the last 24 hours. So let's see where we're going for Ethereum. Is Ethereum looking the same way? Unfortunately, yes. Everyone is seeing this bit of a top, and we also see that top, sideways, and bottoms is saying, hey, guess what? Ethereum's in a sell trend right now. So let's not lose track of what's going on with the market, and make sure that we're following instead of having a bias towards the market. I'm going to go take a look at Sol USD, and then I'm going to leave these cryptos alone. Looking at Sol USD, remember how I said basically if it can stay sideways for long enough, what happens is when it stays sideways long enough, instead of wanting to fall, it stays in this range, allowing the black line to travel outside of the danger zone and back underneath, which basically allows probability to get back up and become support and maybe continue to push up. So Sol is sitting in a very precarious place and could possibly take back off where the lines are currently sitting. Looking at our compass and momentum line, our momentum line's at 94.50, our compass line is at 95.82, and the decision point is when that 95.82 crosses over that 96.26. If that were to happen, that would be about, I want to say, if we have about $5 or $6 move in this direction, that will be enough to basically change where we're going and get Sol back on track to be a buy trend. All right, let's go take a look at Doge, and then finally we're going to be out of crypto. So Doge had a nice ride up. If you were able to get in roughly at about 6 cents, it made it almost all the way up to about 10.3. So that was about a 66% return on your money. But then if you did not take it, shame on you. We got dollar signs. We said it was time to go. The candles were too far from that black line and consequently had to have a pullback. We have since then gotten dollar signs saying, hey, that's a bottom. Let's see if we can try this again. So if you average down, maybe you're riding this ride and you got back up to about 9.6. But hopefully, since we're underneath this black line, and we being this compass and momentum line is underneath this black line, hopefully you're still on the sidelines waiting for the next entry up. And you're not being aggressive and just trying to catch every bounce. All right, let's go talk about our bread and butter, trade assists in the Forex market. So a lot of people have been watching the dollar, and a lot of people have been watching in disbelief as the dollar on the daily time frame, as we talked about it on January the 18th, started making its move up from about 102.76. It has gained about $1.20 in that time. I do know that across the world, Korea and other Asian countries have been having trouble with the dollar and have been watching it sell off. Well, part of that sell-off, I think, needs to happen just so that the yen can gather a little bit of strength and basically rise just ever so slightly more than the dollar, so that way all the USD pairs can fall as well as everything versus the Japanese pairs can fall. So the dollar needs to get stronger, the yen needs to get stronger, and that basically means New Zealand, Australia, Europe, and Great Britain may be in for a little bit of a shocker as these two countries come to blows, trying to see who is more dominant in 2024. Okay, so looking at this, since we're watching the dollar going up, so let's see what's been happening to New Zealand versus the US dollar. Once again, topping motion. So we got our X up top saying, hey, if we didn't get any dollar signs, it's still time to go. That red X is the first warning that things are not looking the way they should. Top, sideways, and bottoms also was saying, hey, we're going back into a sell. Sorry about that, New Zealand. But even the loop was saying, hey, we're red. So as long as we're falling, this is a verified sell trend on the daily time frame. Looking at AUD USD, same thing is happening. The Australian dollar versus the US dollar is in a free fall currently, and everything is pointing to more down as our arbitrage loop is diverging from the sell trend is diverging from the buy trend. So the only thing we have to make sure is that that divergence doesn't trip underneath the green line, but it's extremely close. So let's make sure that basically it's a nice organized fall and not much else. Just a little bit of warning if you're looking at our dashboard on this seminar and you see that 67,334, that 343 is there. So that means in order for the long-term trend, the big trend, to continue the sell trend, the highest it has to go back and touch is 67,343. That can be this week, that can be next week, but if we want the sell trend to continue at the pace that it's currently going, we have to do that, or we have to accelerate so fast that the bands expand and it drags that number down lower as it comes down. And since we're talking about the apocalypse band, let's make sure that we are looking at the overarching trend that's going on a daily time frame. Yes, the arbitrage band is correcting, but that is only good for about a 1 to 3 month trade. This is the apocalypse band. So this is the major correction band that lets us know where things are going. Our biggest gains and biggest things that we're looking for over here is that we stay, as long as Australia USD stays under that purple line, we're in an overall sell trend. All right. Give me 1 second. There we go. There are my candles. And so as long as these candles stay underneath that pink line, we stay in a sell trend. We don't have any dollar signs underneath us, and everything is still saying steady as she goes. So Australia looks like it's going to be more down and more cloud cover going into this next week. Looking at Euro USD, well, Euro USD long term, it's still in a buy trend because we are above that pink line. But in order to turn to a longer term major scale buy trend, we have to get above that red line. And we've seen once and twice we've touched it, but have not been able to get over it. So it looks like this is sideways motion for us, allowing for the next ride down. Let me turn back on my 3D to basically see path probability and what path probability is telling me. It looks like basically everything, because of how slow we've been moving since November to now, things have slowed down so much. Probability is shrinking and coiling in on itself. And with that coil in, that usually means we get a nice slow ride down. Nothing is moving too quickly, which means probability should allow us to get down to maybe 104, and if we're really lucky, down to 103. There is a 67% chance on our daily time frame that we can make it down to 104.66. So let's see if that can happen. But that 67% also is for that we can make it all the way up to 112.50. So watch carefully and just follow the trend, and overall just trade responsibly. Okay, let's go take a look at GBP USD. Turning back off our path probability indicator. Once again, GBP USD having the same trouble that Euro USD. It just can't get above that red line, and that red line acts as support and resistance. And the only way to get above it is if our trend top and trend bottom are above it. Getting large candles to this side basically is allowing probability to expand. The problem with this is if it expands and the trend top sneaks above that red line, that could be a lot of trouble for anyone trying to play a sell. But as long as it's in free fall, we win. So as we watch this and we trigger that this just triggered a sell, let's see if it follows through or if it bounces and allows more room for more up in the very near future. Looking at our loop indicator, because we always want to know what's going on with loop, it just opened up a new sell trend on that last candle as well. So it's saying, yeah, next thing, at least going into Monday or Tuesday, should be a sell. But let's go back to our arbitrage band so that way we can forecast more current as opposed to further out. So yeah, going into this week, we should have a little bit of red, followed by a little bit more red, and probably some green once we get around 125.574. Okay, I'm going to look at the Japanese pairs really quickly to see if we see some of the same thing. So far, NZD JPY 3 days ago triggered a sell, went down, went all the way down, may have picked some people up when it got down to 89.27, and then pulled itself back up. So we need these candles to stay underneath the black line to continue our downtrend. Loop is already convinced that there is more down than upcoming. Top, sideways, and bottoms is not convinced as of yet. Going back to the other side, I want to see where we are, and looks like on our daily time frame, the intermediate band is saying that, hey, we may have support here, not resistance. Anytime we get those O's underneath, that usually means we're going to bounce from here and not fall down. In order for this uptrend to succeed and not go too quickly, we also have to get that back down to about 85.55. So will there be some turbulence in the very near future? Quite possibly, but first we have to slow down. We're falling too fast. Right now, top sideways and bottom is sideways, and our Z Pro indicator is saying all the bands could be convinced to go into a sell trend, but they're not quite there yet. We have to slow down to make that happen. Looking at AUD JPY, same thing. We got here too quickly on Thursday, and Friday, consequently, we had to bounce. And Z Pro had actually made it into the orange, which means that the probability of a downtrend was very, very high. But from where we are now, it's sideways again. So let's see where we land overall going into Sunday, Monday, maybe even Tuesday of this week. Looking at Euro JPY, once again, sitting at a top on our intermediate band. Don't like to see it there, not if we actually want to see it rise. So we're watching very closely, and lots of things are saying, hey, let's go back and touch 158. And if we really want to upset somebody, let's go back and touch 147. Apocalypse Band is saying, hey, you're too far from that 147. You're too far from your mean. You have to come back. So let's go back to our Apocalypse Band on this time frame and see what we see. So yeah, these candles are sitting, the pink line is buried in the top of our Apocalypse Band, and these candles are sitting too far. Anytime we get too far away, it forces us to come back. We haven't been oversold for a while, so there is a very high probability that we can come back and see that 147 somewhere in this 2024. So let's, because this is the largest band, this band can take literally almost a year or so to fully correct. So let's watch Euro all this 2024 before making decisions on where we're going to go long term. But once again, this looks like topping. So, and it's been in this range quite literally since June of 2023 and doesn't look like it's changing anytime soon. Lastly, GBP JPY gave us crosses on June 16th of 2023 saying, hey, this is the top, 189. This is the top. Since then, it has touched 189.60 again. And oh, look, third time touched 189.88, I want to say, in the very most recent future, and then started to fall again. Things are looking promising for a buy trend to still succeed here, though. All the bands are saying, yeah, we have room to do this, whether it's short term or long term. It's all voting saying, yeah, we're in the sweet spot. We can keep this up forever. What do you got? So, and our top sideways and bottoms is saying, yeah, this is a buy trend. If you're playing anything else, you might be wrong. All right. So let's see what happens over the next couple of weeks. Thank you guys for joining, and we will see you next time.